Hello, it's Isabel Winkle, CFO of Brex, and you're listening to the CFO Thought Leader Podcast.
This is episode 1080.
I think early on, what we got feedback and it forced our thinking along at Square, and this is also applicable to Faire, is just how you think about deepening your relationship with your customers. And in talking with investors, if you think about any generational successful businesses, they don't just do one thing. They do one thing really good, but they layer on different services to be a true platform, to make their product more valuable. And then financially, there's so many knock-on effects that help support a business. It grows your business faster. Every customer is more valuable if you sell multiple products or you build deeper relationships. And that actually allows you to invest more, I think, as a CFO. So through conversations with investors early on, both at Square and Faire, I think that it made it clear.
Hello, everyone. Well, it was a moment of shock and awe that Jason Lee tells us ultimately shaped his CFO strategic mindset. Soon after joining Square, Lee discovered a major partnership with Starbucks was quietly bleeding millions of dollars, threatening the company's financial runway. The response was to swarm the problem and field a team to renegotiate terms and preserve the up-and-coming company's stability. For Lee, it was a crucial lesson in vigilance and decisive action. You'll hear that story and much more on today's episode. Our talk with CFO Jason Lee of Faire begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Hello, we're speaking with Jason Lee, CFO of Faire. Jason, welcome.
Thank you. I'm very excited to spend time together here.
So, Jason, as always, look back for us. And we always begin trying to have the finance leader identify where they believe they got the experience to advance into a CFO role. Where were you? Tell us about it.
Yeah, I think as I reflect on it, there's three legs to my story. I think each played a role in I think what brought me here today. So that early formative part of my career, actually, I started in investment banking and investing, first at Morgan Stanley, then at TPG Capital. And it was a great foundation. And it was a great foundation because it gave me an expansive view to looking at a lot of businesses. And you understand and you can learn from the different patterns of what makes great companies, what makes okay companies, weighing industry macro trends versus strategy and execution. And that was very fruitful because you build a feel for those patterns. It's actually what brought me to wanting to work closer with companies. Towards the end of my time at TPG, actually, I spent a lot of time looking at growth stage companies, and it was very obvious and clear then that there was just going to be this massive intersection between technology, between commerce, finance, payments. Like fintech wasn't a thing, and I wanted to get closer to the action. I wanted to be part of that transformation, whatever was going to come out of that. So that's what led me to the second leg of my career, where I joined Square, now Block. And at the time, I joined when it was about 400 people, about $100 million. And I had the fortunate opportunity to see it through, growing to billions of revenue and thousands of employees. And a little bit background, I led finance for the Square business unit, so akin to the divisional CFO. I had the opportunity to lead the IPO process for Square. I oversaw investor relations. And as I reflect on that time there, it was, if I was to kind of summarize it, I got to see what it takes to build a generational businesses and what the journey it takes to get there. And it looks, when you zoom out from it, it looks all up and to the right. But I actually describe it as like peaks and valleys. There's a lot of peaks and valleys. And we have to solve many hard problems along the way. To build that business, both as a finance team, and as a business. And I was very grateful for the opportunity to learn from some of the best CFOs, or the best CFOs, Sarah Fryer, Amrita Ahuja. Like, they were phenomenal finance leaders and business leaders, that I learned from. That brings me to third leg story, and that's what brought me to Faire. I actually joined Faire in early 23, and now operating as a CFO. I had unique insight there. Unique insight just as to the founders, who they were as individuals, as leaders, what they wanted to build, and I always viewed it as an extension of my time at Square. Square was about helping business succeed. Faire is about helping businesses succeed. And it just brings a whole bunch of different business models unique to Faire. And it gave arguably an even bigger footprint for finance to have impact. And that's what drew me to Faire. So I think I view all of those, that first and second leg, as those were both so critical for me and who I am and how I operate, and what put me in position at Faire today.
Great overview for us. Thank you, Jason, for that. Wanted to touch on when you arrive at Square, and again, it was an 11-year investment. You summed it up nicely for us, but I'll just say it looks like you came through the sort of the corporate development door, and you headed corporate development there for a number of years. You went on to investor relations, headed investor relations, and then you were overseeing financial strategy for a number of years at Square. When you look back now, what were some of the the really big challenges that Square faced as it scaled? What was it that was, every company has sort of unique challenges. What was it when it came at Square?
I have a good story to start out with. I actually have many stories to start out with, but just to kind of address your point, there were, as I mentioned, lots of peaks and valleys. And some of it, if I was to think about it thematically, I think when I first joined at that stage, like, there were a bunch of things that we had to fix. There's a bunch of things that we had to fix. Then it became around, are we measuring things the right way? Do we understand our business in the right way? Can we predict our business in the right way? And then you kind of get into, well, how do you invest in your business to maximize impact? And on that first part of that story, my story there, and I love telling this story because it was a little bit of shock and awe when I first joined, where, the first thing I worked on at Square actually was, they signed a phenomenal deal with Starbucks. Great brand, put it on its map. But people didn't appreciate the deal actually was negotiated in a way where it actually was potentially going to create tens of millions of dollars of losses and might bankrupt the company. And so that was an example of, you just swarm. You swarm to the problem, you go fix it, you understand like what happened. And it was one of those things where you had to do great work to protect the company, to protect the runway of the company, to give yourself the ability to maneuver. So that was like part one. And then part two became, well, I think every company at that growth stage is trying to figure out, where do you put your dollars? Where do you invest to grow your businesses? And I spent a lot of my time, at that point, thinking around, the term ROI, return on investment. A lot of companies, a lot of CFOs, a lot of finance that look at, but it could mean so many different things in so many different contexts. And you have to go deep enough to understand, do you have the right measurement? Do you understand it for an individual investment enough? And there were places where we, in sales and marketing, for example, where we either got the I wrong, the investment wrong, or the R wrong. And you tackle that, or are we being too short-term focused or too long-term focused in terms of how much we put our investment?
How did you solve that? In terms of
getting caught in between? You weren't looking at the long term enough and you were in the short term, or was it the other way around? How did you solve that issue, do you think, as you went forward? Or find the right path?
Yeah, and it's a great thing because it's something that actually even today at Faire we're actively thinking about and questioning ourselves. And the first leap, the first step actually is to gain visibility. Of where are our investments? How are they actually distributed across however you define long-term and short-term? And I see actually a lot of companies like they spend so much time on growth on the return, and they underinvest in understanding where their investments are, the expenses are. And once you drive clarity of, whatever the number is, 50% of my investment is actually towards speculative long-term investments. 50% is on short-term. You can then start to reason around, well, okay, is that the right mix? And then do we have the right measurement for short-term and long-term? And so that's actually something we're doing now at Faire. So we did it at Square, and gaining visibility was the first step. Second step was then, do we have the right measurement? Are we measuring things the right way? And really questioning ourselves on that point. And if if you don't have the right measurement, then you react kind of differently. And so that was kind of part two around we're measuring things the right way so that we can hold ourselves the right accountability, creating the right metrics and the right visibility. So those were kind of the two pieces that we spent a lot of time on.
Wondering, just having the experience of having led that IPO, can you share maybe an example of how along the way investor feedback might have influenced Square's planning or strategy, where, you're out there along the front lines or forever fielding those types of questions, but this time you responded and it had impact on the strategy, perhaps. I don't know.
Yeah. I think I can think of like probably two things here where I see a lot of value in for companies to engage early with investors, at least like in some amount, because there's a great, as you kind of pointed out, there is great feedback loop, and it forces you to, that I want to talk about that expansive view, to have an expansive view of not just how are you running your business today, but of what's going on around you and those patterns. And so, I think early on, I think we got feedback and it forced our thinking a lot on Square, and this is also applicable to Faire, is just how you think about deepening your relationship with your customers. And in talking with investors, if you think about any generational successful businesses, they don't just do one thing. They do one thing really good, but they layer on different services to to be a true platform, to make their product more valuable. And then financially, there's so many knock-on effects that help support a business. It grows your business faster. Every customer is more valuable. If you sell multiple products or you build deeper relationships, and that actually allows you to invest more, I think, as a CFO. So, through conversations with investors early on, both at Square and Faire, I think that it made it clear. Now, there's also the other side of that as well. I think I kind of view it as feedback is input, right? And I think you have to be careful also on oversteering. And there was a time at Square where we might have overreacted and oriented around how wedded to guidance, like short-term guidance, long-term guidance. That was a learning lessons for me, where when you give forward-looking guidance to investors, you're trying to give an understanding of the forward view of the business. And I think that is a responsibility for companies. But at the end of the day, you're building a long-term business. You're trying to maximize long-term growth. And if you need to make changes, then that should be the primary North Star. And let's just say there were instances where, if I were to run it back again, I would, I think have more of the courage to just reset, and that's okay, as long as people understand why you're doing it.
We'll move along, but I just have one other. I want to ask you about the S1 drafting process way back when. Takeaways. How did you do? How did you, balance transparency and strategic messaging in that document? What are the takeaways?
What were the takeaways? The first thing that we want to prioritize actually was, how do you describe your business in layperson terms? It's so easy in the S1 process to be a Frankenstein document because you have 10, 20, 30 people all writing, the lawyer, the banker, the company, the marketer, and whatnot. So I think we tried really hard of, can a person just read it and understand it in layperson terms? That was like goal number one, actually. And it was really hard to do. And I think the joke I say is, like, finance people, as much as I love finance people, we're not necessarily the best writers. So, like, bring in communication people and really pressure test yourself around, are we explaining it in a way that people can just understand that concept, like deeply understand that concept, and then you can build that complexity. That was, like, honestly, that was a priority number one of all that. I think priority number two then was, a lot of the effort was really like pairing the S1 with, I think, all of the ways that we communicate the business. Like, you have an investor presentation, you have a roadshow, you have all of those things. I think that naturally the S1 orients around, like, financial metrics. And I think equally as important for investors is for them to really understand, like, what you leaders, management, how do you think about the drivers of the business, the unit economics of the business, right? And that can vary so much from company to company. And we did spend a lot of time, some through the S1 and a lot of it through our investor presentation around, well, the drivers of our growth. It's just not the growth percentages. It's actually, well, how do you think about new acquisition versus retention? How do you think about the return on investment of a sales and marketing dollar? And there are many ways to frame that. And that is actually where we spent a lot of our time to get people to have conviction on why Square and now Faire has a ton of growth durability, why we have a great business model, even if we're not profitable at a given point in time.
Yep. Yeah, I was just trying to remember. I can't remember who the underwriters were, but just wanted to ask, what factors did you consider when selecting your underwriters?
We had three underwriters, three lead underwriters: Goldman, Morgan, and JP Morgan. And it was fun trying to manage, again, it's all-star talent team, but when you have all-star talent team, like, there is a bunch of management you have to do with that. As we think about advisors, like, I reflect on it, and it's something, I think it's the same as how I would think about advisors to me today at Faire, around, you want someone, I kind of say, of, like, there's the table stakes around, they have the intellectual rigor. They don't just do the motions. They actually understand your business enough, and they will to take that effort to do so, because then you'll get so much better advice when they actually understand your business. I think the second part of it, is, kind of say, they tell you what you need to hear versus telling you what you want to hear. And that's really hard to decipher because there's natural incentives, I think, in any type of advisor, whether they're underwriters or whether you're lawyers or whatnot. And so there is a trust of, will you actually tell me what I need to know? And it might not always be good news. And it shouldn't be good news, but when you can trust that it's what you need to know, you make better decisions as a result of that. And Square's IPO was tricky. There's a lot of hair to it. And, I think any company's IPO actually has its own hair to it. And so as I endeavor on Faire is, like, you want people that you can trust that will tell you what you need to know.
Yeah, excellent. Well, we will have some additional career-related questions for you, but right now, let's find out about Faire. Tell us about this company. And again, you arrive, and I should just mention, you step into a is it a vice president of finance role
Yep.
for a number of years?
Yep.
Senior finance role, and then you step into the CFO role. If our finance leaders tell us that's the way to do it, instead of just landing in the CFO office sometimes and getting familiar with a company that way. Tell us about Faire, though. What type of company is this?
Yeah. Let's talk about Faire. It's like, I love talking about it. I actually just came back from an investor conference. And so whenever I talk about it, I get fired up. So what is Faire? It's a wholesale platform that connects retailers, people that sell things, with brands, people that make things, and ultimately helping retailers discover and find the right products that sell to their consumers. So imagine your favorite retail shop, like your local neighborhood, that bookstore, the home store, or the toy shop. They stock hundreds, if not thousands of items, right? Each of those has gone through some sort of wholesale relationship where you have to negotiate minimums, minimum orders, shipping, payment, how you pay for it. And so there's a lot of complexity with just managing that. But if you think about the essence of a retailer and why you go to a retailer as a consumer, it's that they have great products. They have a great assortment of products. And so we help with that number one job. Faire helps with the number one job for a retailer, which is find great products that sell. So we help retailers do that in three ways, right? We have a marketplace where we have hundreds of thousands of retailers and 100,000 brands. And they're like, how do we find each other? It's such a fragmented market. And how do you find the diamond in the rough that becomes a bestseller? We help them with that. We help them also. The second part we help them with is, well, I just mentioned that complexity. There's a ton of complexity on the workflow, and how do we bring technology to automate that, to make smarter decisions so that you spend less time in PO, invoices, all of that stuff. You just order and go. And then the third part, because we can aggregate those retailers and brands, we can negotiate and ensure that they're getting the best value, right? Negotiate on their behalf to get better shipping terms, to get payment terms. Not every retailer gets access to payment terms like big box retailers. And they get access to the best prices, right? When you do all of those things, it's like such a rich tapestry of different value props. You really can help make these retailers successful. And the last point I kind of finalize with that story is just the incumbent wholesale experience is like so challenging, so fragmented, so manual. Like I could use every adverb possible, but the best way to describe it is wholesale is where consumer e-commerce was 10 to 20 years ago, right? All the things that you take for granted as a consumer, Amazon, wherever, and just how easy it is, wholesale needs to go through that transformation, and we're helping do that.
Could you maybe tell us a little bit about the company's capital structure, sort of an abbreviated history for us?
Yeah, the capital structure is pretty straightforward, I would say, actually. We're a late-stage growth business, and as the company grew and hit each milestones, the capital has been primarily through fundraising equity, with growth investors, or first with seed investors, and then with kind of your growth stage investors. And we have a phenomenal set of investors, I would say. Everyone from like Sequoia, Khosla, Forerunners, like I think the list kind of goes on. And I credit my predecessor and the founders for doing so. And then I think more recently, as you take an eye for the future as well around, well, you evolve that investor, you involve the investors that come in. And so more recent investors look like some of the public investors, Wellington, Bailey Gifford. These are the investors where they're long-term investors, but they know how to navigate, and they engage in, inevitably our public journey life. And so, again, you're kind of always looking ahead around not just what you're immediately solving, if you're fundraising for your business to accelerate the business, but around the types of investors that you're bringing in that, will put you in a position for the next 5-10 years.
So we've seen some of the speculation that you're on the path to an IPO, Jason. But as far as the milestones for you since your tenure, and it's again, you stepped in the CFO office last July, but you've been with the company now over 2 years. Just curious if you've been, have you raised capital or have you participated in bringing aboard a new investor or what? Any milestones in that respect?
No, we haven't needed to. And I think, I credit my predecessors for, we have a very strong balance sheet. We have a very strong balance sheet, nearly $500 million of cash and liquidity on our balance sheet. So it puts you on a very front foot. So all we're focused on is actually, how do we invest and accelerate all of these bets to go faster? And that allows you, it's actually a competitive advantage in this environment. And so we haven't needed to bring in an investor. Now, on your point around public company journey, I think companies should always be planting seeds around what that journey could look like, how long that takes. And in a way, you're always starting and raising the bar each year. So I've been very explicit with our finance team and with our leadership team, which is there is a ton of value to operate like a public company, irrespective of when we actually go public. And so we have very definitive milestones, goals around, defining what does operating like a public company mean, and when should we be fulfilling those? And so we have very definitive timelines around like different elements. And, ultimately it improves how you understand your business and understands how you understand the facts and the data that's come in to reason about your business. When you have better facts and data, you can drive better insight on the business. And then, operating like a public company, a big part of it is also being able to predict and to be able to see out on your business. And so it comes back to, can you forecast your business? Do you have the right metrics? We talked about investment portfolio. Do we have the right mix of our investments so that we know what our Act 1 is and how to measure that? Our Act 2 is. All of that has incredible value to building a great business and to have strong execution. So we have our internal milestones that we're running hard on that ultimately also positions us to access the public markets when we deem it fit.
Curious as to whether the visibility into the business, was there something that you modified or a particular metric that you raised the profile of since your arrival or before, that you helped to, bring to the forefront and wanted to educate the organization better about? Anything?
Yeah. So, what I can say around here is like, we just finished our board meeting and we talked about long range plan. And I talked about, our North Star as a business is A, make our customers more successful, but then B, maximize long-term growth with return on investment. And so the key word there that I have probably double down focused for everyone is return on investment. And so I spent a whole lot of my time there around driving clarity. And I think it goes like a CFO's role in many respects is like a chief investment officer, right? You're making investments, you're making bets. And so do you understand the ROI? Do you understand how it plays out, what the impact of those investments? And then it goes through the allocations. That's where I've spent an inordinate amount of my time, because it's really giving tools for the business to understand we're driving positive customer impact and like, are we having maximum leverage? I'll give you an example. When we, where a lot of CFOs spend a lot of their time, when you invest in dollar sales and marketing, how do you ensure that you're measuring things correctly, right? So we look at how quickly does an investment in sales and marketing, how quickly does it pay us back in our gross profit payback? And then we look at what does that return look like over time, right? If there's a annuity stream, a financial annuity stream that comes with it, then we can reason there's value to that annuity stream against the customer acquisition cost. Now, the fun part is a salesperson behaves differently than a paid advertising dollar. Or what about, how do you think about a new experiment where you have zero data, no data at all, versus something that you have a lot of history, right? And that's where the judgment becomes around how do you apply ROI to those examples. I think a lot of it is you drive clarity. You put, you describe the definition, the formula, and it allows you then to reason about that. So that's been a place where a big part of the investment strategy is defining return on investment. And then second part is how do you invest across? And we're getting better at this. I wouldn't say we're all the way there, but even to say that, even our sales and marketing dollars, just stay with that example, 20% of it is with stuff that's on experiments or new channel opportunities that could become big, right? Just to be able to say that and have the right way that we measure ROI for those efforts is so much power and information that then make you have better decisions so that when things work out, you double down. When things don't work out, you redeploy. And it kind of goes back to the chief investment officer, like having that mindset.
Sounds like you're confident that the company's data is in good shape. I'm just wondering, as you stepped into the role and you came over from Square, I mean, was there ever, how did you make sure that the data, all the customer experience elements there that are being measured were accurate? I mean, was there ever any concern that you have stepping into a new company, a new role, you have a lot on, a large bet there?
Yeah. So to a lot of credit of to the team, the founding team, there was always a strong data culture at the company. And that was a big selling proposition, was like, when there's a big data culture, data is power, right? And so if you have to invest in a strong underlying infrastructure. And why? Because it's embedded in our product, right? Faire makes recommendations based on data and algorithms, machine learning. So it needs to be there. So I didn't have worry that we didn't have that foundational layer. But where I have spent time, where you need to spend time is, well, how do you ensure that you're investing in appropriate finance specific systems and data, right? We didn't have a finance systems team. As strong as we had we had a strong underlying data, you need someone that lives and breathes and thinks about finance data systems, how they intersect, how they interact, and all of the rules that account for that. So that was like priority number one. We needed that yesterday. And so then you can, when you have a strong foundation, it allows you to move quickly once you bring in that talent. And then it's ensuring that when you think about, so many companies have this, which is operational KPIs, financial KPIs, are they literally the same thing? Do they come from the same sources? Can you translate between them if there are differences? And I think that's super critical because I talk about this concept of signal to noise. You want maximum signal to noise. And if there are differences and definitions and data sources, you're just creating so much noise that actually inhibit good business decision making. So that's where we've invested and continual invest in. And I think in a way it's an evergreen area because the business continues to evolve and launching new products. And so you're never quite done. And it's just keeping pace and raising the bar each year.
We like to explore with finance leaders their thinking around AI and AI solutions. And we wonder, what are some of the challenges that you perhaps have encountered when it comes to implementing AI-driven solutions, whether it's for helping the company operate, help us explore those customer relationships ever more closely, however you're using AI.
We found fantastic use cases for AI, and I think it's growing so rapidly that, to your point, you're going to find things that have immediate impact right away and run as fast as possible. But equally as likely is you find things that don't work. And that discovery and learning process, I think, is critical. So we actually have three ways that AI plays right now at Faire, which we apply AI for our customers, right? We have AI that supercharges our algorithms to help provide the recommendations. And we have all of the eyes on that because it's like embedded in our product. We recently launched, secondly, we launched AI to also how to service those customers, launching a chatbot to do customer support tickets. And to your point, there are all of the great metrics on efficiency, and maybe expanding how many tickets that we can serve, but you also have to have the quality, the check metrics, the quality metrics to ensure that you're actually executing and implementing the AI in a way that is conducive for the customers, right? So there's like check metrics that come with that. And that's something we've had to be very mindful for. But the benefits are very clear and obvious, and it's really around execution and implementation. The last category, it kind of, as you can where it alluded to, is just around AI for finance. And I will say, like, I am biased and inspired because my mentor, Sarah Fryer, she's the CFO of OpenAI. And it's like, but it's very clear and obvious for me that, like, in no world is the future of finance, the finance of the future doesn't have AI in there, in the workflow of how you run and think about the team. And I admittedly, like, my team is still early on this. I would say we're early in the journey that I would like to be, but it's all around, well, how do you learn quickly? How do you have a tops down push and a bottoms up push? We actually recently did an AI hackathon for some of our finance teams to really experiment. I think it's like enabling the experimentation and the piloting to find out, to expand the imagination of what can work now, what needs a little bit more waiting time. And then once you get that inspiration, people become motivated to figure out how you pilot and operationalize it. And I think that operationalizing is like really critical on just the check metrics, right? We have a high bar in finance and we need to make sure that there's a certain level of understanding quality. But you need that first part, that like inspiration, that experimentation, and it to release the finance team towards. And so we're really excited at Faire here for that.
I meant to ask you a little bit about your FP&A team. Curious how you, and I wouldn't imagine it's a very large team, but I mean, how do you structure it? And just borrowing a page from the FP&A experiences you've had in the past, did you architect the team in some similar fashion?
Yeah. So I have a standing construct. I do think it's important to be aware and sensitive to like how the company is organized, and every company is different. But like generally how I think about it is there is, I actually kind of call it, I have a corporate finance team and I have a strategic finance team. A corporate finance team thinks at the highest level around how do the different components come together? You know, how do I understand my financial profile at the like highest level? And then they oversee the annual planning processes, set the right standards that everyone operates towards. And then you have a strategic finance team that acts as what I call finance business partners. They're the folks that are almost operating like mini CFOs for their business partners. And whether a company is organized functionally or by product, you adapt that structure to the business, but ultimately you have leaders that are embedded with those teams. They like understand what's going on in marketing, what's going on in sales, what's going on in product, and they act as thought partners to think about business decisions and investment decisions at that level and the right metrics there. And so, you know, they're kind of organized with a hybrid of product and functions. And then you have those teams work really closely together to have the right feedback loop, because it allows you the adaptability to go deep in a business function, but there needs to be some level of consistency around how you do things like planning or budgeting, so that you have high quality information when you roll it up to the company, and you have to make trade-offs. How do I make a trade-off on one investment versus another investment? And so that's how we've organized the team. But I would say, like, it's always evolving. And I think because companies change, orgs change. And so that's something I think as a CFO, to not be so rigid about what is the approach at a given point in time, and always be questioning around, do I have the right organization setup structure for the talent, for the team, for the business? And how do I stay front footed that it's aligned with what the business needs going forward.
We are up to what we like to refer to as our finance strategic moment. We're asking you to hold on to something for us. Curious what comes to mind when we ask that question to you. What's a finance strategic moment from your past? Might have been 10 years ago, might have been last week. Anything?
I mean, there's so many good ones. I have a little bit on the recency side. What comes to mind actually is this concept I kind of referred to a little bit ago, and kind of one of my answers is just signal to noise. And like my maximizing signal to noise. And one of the things where I think any CFO encounters is there's an enormous amount of information that is measured, collected, and so it's really hard. It puts a lot of pressure around how do you decipher the noise? How do you simplify it to really focus on the highest leverage of places? And so a recent example is actually helping reframe the drivers of Faire and the drivers of our growth. And it was a simple change. In a way, it was synthesizing and change of our drivers. To give you a little bit of context, like one of the powerful things about Faire's business model is our customers buy more on the platform over time. So if we didn't acquire a single new customer, our business would grow because our retailers, they find great products, they buy more in each successive year because they find great winners that become bestsellers. Now, as a business, when we were like looking at performance and like, how do we drive that upwards? Often we framed it as, how do we drive percentage lift? How do we drive volume lift? And, there's a lot that goes in there, but it's a few degrees removed from actually how you think about a customer, right? It's an output of that. And it doesn't actually describe, well, why does our business grow with our existing customers? Why is our NDR, our net dollar retention, over 100%? And so what we did was we looked at a ton of data around how our customers behaving, but the key thing that we did was, well, let's simplify it. How do we simplify this down so that every individual in the company could understand this concept? And we simplified it to two variables, which is a retailer trying a new product for the first time. And we call that discovery, right? How do we help retailers discover new brands, try out new brands? And when they try it out and if we're successful in making that recommendation, right? That becomes, they repurchase that. So we said discovery volume, and that was like a metric. That's like the leading spear, if you think about it. And then separate out reorder, right? So then it's the reorder rate. How much of those new discovery purchases have a second order and a third order and a fourth order? And so just that simplification, it was much more consumable to every employee as a company. And then as you think about what are the customer problems we are solving, it's much more customer centric. And so it quickly kind of helps you understand, well, how much am I helping a retailer find new things, new products? And then how good is our ordering experience? If it's like really painful to reorder, if we're making poor recommendations, then the reorder rate is going to be quite poor, right? We need to be recommendation, high likelihood of things that consumers want. And so that was a way where you had all of the existing data, but it was actually how you interpret it, how you frame it, and simplifying it, not adding more complexity, but simplifying it down, that helped people think more critically about what they were doing and ultimately contextualize customer impact to ROI.
Hey, when you finally stepped into the role, and again, it wasn't too long ago, we know, Jason, but what surprised you about this? I mean, you've observed CFOs, you mentioned Sarah Fryer. You've observed senior finance people for years, but now that all the responsibilities fallen on your shoulders, what is it you wish you knew?
What did I wish I knew? If I think about it, it reinforces actually one of the core advice that I've always told people, but it amplified it even further, was just around like the importance of communication. Like, and a CFO's role has so many more wider audiences, company level, employee, more deeply with executives, investors, with board. It really pressures and puts added pressure around the range of audiences and the stakes of that. And so what I can always tell people is early in my career, I was always told to sharpen my technical acumen, my analytical acumen, my how I understood business. But it quickly became clear over time too that yes, those things are important, and oftentimes they're table stakes. But even if you're the sharpest person in the world in the room, it doesn't matter. It really doesn't matter if people don't understand you. If you can't bridge that last mile, you've done 95% of the job, but you don't have that last 5%, there's still a gap. And so I think I wouldn't say it's surprised me, but it's really reinforced that point. Because of the range of audiences, the range of situations I'm in, and how you have to find the right synthesis, the right altitude of information. And so it's an evergreen era for me. It's like I tell my parents that I'm I'm a spokesperson, and they don't believe me. They do not believe me because I consider myself an introvert. But you just have to work at it, and you have to work at it both from a written and from a verbal perspective. And it's really, I think doing so allows someone to be a better finance leader, to be a better collaborator, and more trusted with key stakeholders.
Forgive me, I called up, I realized that Sarah Fryer, I knew she was CFO of Square, but she was there 6 years as CFO. So while you were there, so of course, yes. So we
work shoulder to shoulder on many things. That Starbucks example, I worked with her on the IPO.
Yeah.
We have very fond memories of how do you keep the team motivated, given, through the IPO process and post IPO. And she was a wonderful leader to learn from.
One of the more memorable appointments last year, when she got the OpenAI appointment, she left Nextdoor, where she was a CEO for a number of years, 5 years. Did it surprise you that she became a CEO after her tour of duty as a CFO, or
no?
Nothing would surprise you?
No, I mean, when you have someone like that has that much range.
Yeah.
That has that much range as a leader, as a business thought leader. She could have done anything. She just happened to choose one of the trickier opportunities to step into. But I give her a ton of credit around, she was inspired by a mission, and she took a swing. And I think that's actually, you learn a ton from that. Ultimately, I think it makes her a better leader, and I bet she has much stronger pattern recognition. And so I kind of give her a lot of credit. And I think, CFOs, they don't have to be limited by just thinking about my job is finance. I actually kind of say that you're a business leader, you're a business, you have a mind for the business. You just happen to have a finance toolkit. And if you're curious, then there's a whole range of things that you can do and ultimately solve problems for a business versus only thinking about it in the finance lens.
Right. Well, Jason, we'd like to ask our guests to reflect a little on the personal side for us. And we're wondering, is there something your colleagues might not know about you, something many people might not know about you? Anything, an interest, a pursuit that you have?
I probably have two ones, and I'm kind of cheating a little bit because they're increasingly known. But the first point is a little bit my origins. My origins around, I grew up in Vancouver, Canada, and my parents founded a Asian grocery business in Canada. It's called T&T Supermarket. It's the largest Asian grocery business in Canada. My sister runs it today. They are expanding into the US. So a lot of my time was spent in warehouses, in the bakery section, in just all parts of the supermarket, just digesting and learning from them. And And so it's a phenomenal story of resilience as well as, the business mind. And they really, ultimately, it showed me how building anything worthwhile, it's supposed to be hard. It is supposed to be fun.
Literally a mom and pop shop that has been built into the seventh, eighth largest.
Yeah,
grocery
it started out as
store.
one store,
Yeah.
and it became
Amazing.
30 stores in Canada.
Is it 20? How many years deep are they? Are they 30 years building?
In the early 1990s, and so
Wow.
they
That's
are,
going up pretty quick.
and there's just been phenomenal demand, and I'm very excited. My family is very excited because they just expanded into Washington, in the Washington State, and they have locations coming to California, and it's really exciting. So that's part one. Part two is that I played rugby. I played rugby in high school. I played rugby all the way through university at the University of California at Berkeley. It was a phenomenal rugby team. I don't have the facial stature or the physical stature of a rugby player, but I learned the craft. I was fast. I was speedy, and it did teach me, like, it taught me around what it takes to be part of a high performing team. It taught me a lot about resilience. You definitely get beat up a lot as like the smallest person on the field. And it kind of goes back to, like, how do you navigate the hard times? How do you build resilience? Because if you want to do something great, that's what it takes.
Are you?
So those are kind of the two tracks I would
Yeah.
kind of call to.
Do you still play?
I wish I haven't itched all the time. I actually funny thing was post college, I couldn't play. I didn't have the time to play regular rugby, but we played touch football was the closest thing, that I had. And I loved it. I haven't, since having kids, it's been a little bit harder for me to do it. And so I miss it dearly because of the team aspect, the competitive aspect. But I still follow it very closely.
Okay. We always like to ask quickly if you have a book recommendation or something that's influenced your thinking over time. Anything for us?
Yeah. Gosh, there's so many books. The most one that comes to mind is probably a little bit more recent. A book called Think Again by Adam Grant. And why I picked that book, like, my mentors have always taught me just on this importance of, like, being curious beyond your domain, being curious around what you think you know and your own pattern recognition and new patterns. And the book talks about, well, how do you rethink, in a way, unlearn some of what you think you know in the past, in the spirit of curiosity and open-mindedness, to think about, like, the go forward. And so when reading that book, it was super valuable to pressure test your own thinking. And I think it makes me a better leader, just in terms of how curious you are and how expansive, how much of a growth mindset to take, so that you're not just always relying on your own prior pattern recognition.
Yeah. Well, we're up to our last question, Jason. We'd love you to look forward for us and identify or share your priorities as a CFO for the coming 12 months. What would those be?
3 priorities as a finance leader, some of them more specific to Faire, some of them I think more kind of broader, but growth. That's like number 1. I could say this maybe as 1, 2, and 3, but growth, like I mentioned, our North Star is maximize growth with long-term investments. We had this like interesting board meeting where we showed our plan, and it was like, hey, here's our plan. And it's like, it's in line or better than the last one that we showed you. But when we look in the context of our opportunity, their push for us, and I think rightfully so, which is, how do you move faster? Like, yes, you're beating your plan, but your aspiration is you want to manage so deeply and have, and be the standard in your industry. So how do you go faster? And that is like all focused right now for us around how do we execute faster? How do we allocate our investments so that we're driving maximum leverage? That's number 1. Number 2, a big theme, and it is around just how do we continue to raise the bar on how we operate as a finance team. In a way, you're never done. And so this is really a values for us as a finance team. that like you're always seeking to get better. And we have a lot, like everything from team. How are we hiring the next wave, developing our team? How do we do our processes, get better quality reporting? How do we plan more intentionally? How do we sequence our investments? And ultimately, like kind of we talked about early on, operate like a public company, right? And, and so there's a big focus around raising the bar. And the third one is I just like touched on one of the themes that you asked about, which is like, how do we build the finance of the future? And specifically, how do we really harness the power of automation and AI? And the tools are rapidly evolving. It's crazy to think about that. Like when I joined Faire is when ChatGPT became a real big phenomenon. And there's been so much innovation just in the last 2 years. And so as a finance team, we need to be moving faster and trying out and learning and coming back to these tools around, either making ourselves more efficient or driving more insight that we couldn't actually consume before. And so, building the finance of the future, that's what we need to do. And I think the fantastic thing is people, like when they see that the power of it, they get really excited. And it's just harnessing that excitement to tangible things that we're doing.
Jason Lee, thank you for joining us on CFO Thought Leader.
Oh, thank you so much for having me, Jack. Really enjoyed the conversation.